Hey everyone, today was a seesaw of a trading day. My P&L kept going between like positive $300 to negative $300. That was very, very frustrating because I want to end the day with some money. I don't want to take a trade and lose what I just made. That was very frustrating. So actually I just took a loss prior to this, but then I just felt like this was a good candidate for a liquidity grab. So I put my order, my limit order in, so that if it pulled back a little bit, I could get in at a decent price. And this is another good reason why if you get stopped out, just accept the loss, and if you still feel good about the original move, get back in at a better price and see if you can recover that loss, by exceeding it. So here I just had to endure a little bit of drawdown, right? I mean, I hate like when you're up and you have like $200 of drawdown, that's not a big deal. But when you haven't been having a good trading day, and it's really really tough to endure a drawdown because you don't know what the trade is gonna do. But you are kind of thinking, well, statistically, there is a pretty good chance that if this is a liquidity grab, it could break that resistance up that I drew above. So that's worth taking that risk. This was a pretty good trade, a pretty good risk to reward ratio. And as you can see, it starts to go in my favor. And it's tempting just to close it right now for $400 profit. But I mean, if you want to make money, you know you gotta be able to hold for like pretty decent moves. Yeah, so that was unexpected, that little drop right there. But again, I diamond handed through that again with my stop placement there, just at about 10 points, 9 points below. So let's just see how this trade plays out. Yeah, as you can see, this one, it starts to reach this escape velocity where I feel like, okay, we've now gotten to a point where I don't think it's going to pull back to my break even. So I pull my stop up to guarantee me 5 points of profit. I'm letting it run. As the price improves, I do pull it up. So I pulled it up just under vwap, which is that purple line. And as price goes up, I pull my stop up. So I felt pretty good about it being under vwap. Almost got stopped a couple times, but again, when you get stopped, you get stopped. Just accept it and end the trade at that point and wait for another opportunity to trade.
Order filled.
That notification sound you heard was the sound of my brokerage Tradeovate auto liquidating my account, because I have a daily profit trigger set up so that as soon as I hit my goal of making $2,000 a day, I auto liquidate my account and I'm supposed to be good. And normally that's fine, and sometimes I don't always have it on. Some days I remember to increase it if I'm having a good streak, but I totally forgot about it. So I was shocked when my account got liquidated. And so I just took it as like a good thing. I was like, okay, that's fine. Auto liquidated. Let me just get back in if it dips. Well, it turns out this move was so good, it never dipped below my exit price. For example, like, I mean, if I was forced to exit and it dipped like 10, 15 points, I would have re-entered, but it never dipped below that. That was basically all it did. It would basically go back to my exit point and then bounce off that and keep going up. And originally, my target was the overnight high, which would have given me a $6,000 win. Well, I ended up only taking home $2,000. So that was a bit frustrating that I lost out on some potential victories because of this feature, which is actually pretty good and helpful. I think it's good to have use the risk setting feature in Tradeovate. But in this case, if I forgot about it and I had my runner set up, which was my own form of risk mitigation, and it totally just it hurt me today which is unfortunate. But a green day is a green day. I had a little bit of a losing streak lately, so I'm going to take this win. Thank you.